If you are on the couch right now, maybe in your bed, still working from home, you might be looking into some office deductions as you prepare your taxes, but not so fast. Ever since the 2018 tax reforms, remote workers cannot claim deductions for unreimbursed expenses or home office costs. So who can? For the answer to this and more about tax season, I want to bring in Medora Lee. She's a money and personal finance reporter joining us for free. So this consultation isn't costing us anything. And we want to really give information folks at home can use, Medora. So who can still claim home office deductions?
You're exactly right. Just because you work from home doesn't mean you can take a home office deduction anymore. You can only do so if you work for yourself, meaning you're not a W-2 employee, not working for a company, or you work a second job outside of your W-2 position, and you exclusively use a specific space in your home for your work. So that's pretty much the only times that you can take a home office deduction.
So for the people who can, explain the two methods of calculating the home office deduction. Which works best?
Well, it kind of depends on your situation, but if you think that you have a lot of deductions that you can take, you can itemize things like, and it's not just your cell phones, your laptops, your printers, and office supplies. You can actually deduct so much more. But you also have to make sure you document everything. So you can also deduct a portion of your rent or mortgage, your real estate taxes, homeowners insurance, and utilities. So, for example, if you use 20% of your home as your office exclusively, you can deduct 20% of any of those expenses from your taxes. And also, if you're self-employed and you buy your own health insurance, you can deduct all your health insurance premiums for yourself, for your spouse, and even for your kids. So, but you just have to be very meticulous in keeping everything in order and all of those receipts.
Yes, don't guess and don't make things up. And you mentioned that
Exactly.
20% number. You're kind of using that as an example, but people can calculate, what is it, the square footage of their home office in relation to the whole space to get that number?
Well, that is if you're itemizing. So if you're itemizing, kind of keep track of those things. And then if you're kind of not so great at keeping receipts and you don't want to do the math, there's a different method. You can take it. It's called the simplified deduction. And that's $5 per square foot up to 300 square foot. So $1,500 maximum you can deduct. And if you only use that, say you only work at home exclusively for yourself for a portion of the year, then you just kind of prorate that amount.
Great. And Medora, what other ways can people reduce their tax bill?
So we still have a lot of time to top off any 401k you might have or any retirement funds. You can get that sort of full pre-tax benefit that on your taxes. You have until April 15th to do that and be included in the 2024 tax season. So that's one thing you can do. And also, I don't know if this is really maximizing your return, but because Trump has talked about maybe cutting funds, cutting staff at the IRS or moving some of their IRS agents to the border, you might really want to get on this as quickly as possible, because if that happens, they will have less staff to help you and maybe less staff to process returns. So early is always better. And also, if you can, do a direct deposit, because that is the fastest way you will get your return, your refund, excuse me.
Really good advice.
Yeah.
If there's a year to do it early, it's this year. We appreciate you waking up early with us from Chicago. Nobody does it like Medora Lee. Thanks for your time.
Thank you.